What's going on? Good evening, good morning, wherever you are. Buddy Langford, how you doing? Aaron, Pozo. Pozo. What's happening, Pozo? Shadow 777. Hello, good afternoon. 6:14 p.m. here in Miami. Oh, cool. Yeah. Well, you're getting ready for dinner. I'm getting ready for. Well, I've had breakfast. I've had my coffee. Quite the time change, or the time difference. How about that price action today? Yeah. Oh yeah. Whipsaw. All over the place. What's up, Vivamore? How you doing, man? So, yeah, just looking at Bitcoin here. Let's go full screen. We're on the hour chart. This box here was the weekend we just came out of. And this yellow line is our September high from last year. Remember how we rallied up to almost 23k? Well, we've been spending a little bit of time above that point here, but there's been a very big sort of like cloud of resistance above us, being basically 24,000, right? So we're sort of battling to try and figure out like what's the next step here. What do we do from here? Now, before we go into that, let's just recap what happened over the past, like I think it was about, X amount of hours ago. Let's see, 5 or 6 hours, 6 to 7 hours ago, right? We had Jerome Powell come out doing just a speech or just a little Q&A session. And that was broadcast over CNBC via Google, like via YouTube. That's the way I watched it anyway. Let me, I'll grab a link to that for those that missed it, and I'll pop it up in the YouTube chat here. So you'll basically see, basically the same kind of sentiment that he shared during the funds rate decision. A few days ago, like back here, on the 1st, 2nd of February, roughly, he just reiterated that same sentiment, right? Now, the thing that played into this drop here was a couple of things. There was the earnings of the really big companies out there like Google, Apple, Amazon, showing a bit of a slump in their earnings compared with last year's performance, right? Nothing devastating, but enough of a slump to cause a bit of doubt and a bit of like a pullback, a bit of fear, right? However, these lows that we've set in over the past few weeks here, couple of weeks, they've been maintained. We have not convincingly broken this structure yet. We're still ranging, guys. Like, we're still very much in the same neighborhood of price. So, and then the other thing, the other like sort of hit that we had in just recent price action to sober us up from this high that we felt after the funds rate came out as a 25 basis point hike was. So there was earnings, and then there was the unemployment rate, or the jobless claims. Now that came out, let's see, go up a little bit. Unemployment rate came out lower than forecast. Now what does that mean? That means that fewer people are out of work. There's more people in work than was forecast there. And you can see that unemployment rate has been dropping, which is kind of the opposite of what the Fed is aiming to do. The Fed's trying to tighten the economy up and, just everyday people that contribute to inflation, contribute to demand that drives inflation. The more people with money in their pockets week in, week out is, that's fuel for more demand. Like, people are going to go out and spend that money on goods and services, just running their everyday lives. Like the majority of people aren't concerned about the economy and inflation, right? It's not at the front of their mind. It's not a high priority to the majority of people. Us as traders and investors, and we're always looking at the market with the figures. So, we're a bit more conscious of what the rates are at, where things are headed. So, yeah, we're not exactly like an unbiased or blind selection of the population. We're a little bit more privy, financially savvy, right? So, okay, with that in mind, so unemployment having a reduction off the previous report, which is only at 0.1%, by the way. So unemployment has been coming down since November last year. So 3.7, it was a steady 3.7 November, December. And then we had January, it came down fairly significant. And then we've got another reduction here. So that's not the best. That's not bullish news. That's kind of bearish news because, yeah, drives demand, right? So let's go back here. So we had, double whammy. Not the best earnings and not the best unemployment rate as far as what the Fed's trying to achieve, right? But look, I think the optimism that came out of the funds rate is what obviously drove this up here. But then him coming out and reiterating those points that he made and staying strong pushed the market up. There was enough confidence there to get us rallied to this point. And it wasn't so much Bitcoin's own credit there to why it rallied up. It's more so the stock market. You can see the stock market rallied up and then pulled back dramatically, but then rallied again. So that was a very confusing day of trading for people trading in the stock market, which in turn lends its sentiment to the crypto market. So we had this huge rally up, massive correction, wiped out anyone that went long, wiped out or stopped out. So anyone that sort of went long up here, either you had to have had the foresight to take profits up here, or you got stopped out, or if you had a trailing stop in a position you took, you basically had your profits taken. And then look, whole move got recovered, bang, support and liquidity grab below the previous low. So there's a swing failure pattern right here. See that? The price just went a touch lower. No doubt trapped a whole bunch of bears like here. Because bang, like violent, this is very violent moving, like price moving in either direction. It not only happened in crypto, obviously crypto borrowed the move right out of the stock market here. So crazy. Why did price move up here? Like why the hell did the stock market come all the way back up here? And potentially it's because they left a big gap, fair value gap, right? In this region, there's probably one up here too, right? That hasn't yet been filled. So I think maybe tomorrow, maybe we'll see some activity up to claim some of that zone there. It doesn't have to happen, but it happens more often than not. Like these zones where price deviated from tend to get reclaimed. So back to crypto, back to Bitcoin. Now, you can see in the title of the stream today, or tonight, wherever you are, we have new CPI data on the horizon. Now that comes out on the 14th of February, so that's Valentine's Day. Now, as we know, with CPI data, at least in the last few reports, the market has rallied up into anticipation of that data being released and it being positive, right? So is that what we're going to get over the next few days here? Like for the rest of this week, are we going to get some of that momentum, coming off the back of Powell's positive, reiterating his positive and almost dovish sentiment here. Like he's optimistic for the future, right? So yeah, not only that, but we got CPI coming up. I think that could be recipe for us to come up and at least retest these highs here and see 24K again in the coming days, if not even sooner. I don't want to rule it out, but I doubt, like, my money, it wouldn't be on any kind of like crash or correction in the near future. But dangerous trying to predict, obviously. So you just react to what comes, like, you know, react to what the market does. Have your stop losses set. But yeah, look, if I had to pick a side, I would say that I think it's more likely we see some kind of like rally into some higher targets, maybe even 25K. You know, off the back of, you know, if CPI comes out better than expected, so a deflation or disinflation, where inflation data comes down or shows that it's continuing to come down, then that will provide a positive effect on the market. Let me get the events up here because I've been marking them off. All right, check out this anticipation of CPI day. Check out the way we rallied up in anticipation for that awesome result, right? A 6.5% CPI. That's down off the 7.1 we had last time, right? And we did the same thing. We anticipated a good result, so we rallied into it leading up. And yeah, we got the good result. We got an awesome result, and we continued to rally. People were expecting a pivot, which was kind of pie in the sky, wishful thinking, right? And then, you know, the funds rate came out at a 50 basis point hike. So, you know, perhaps that's what caused the sobering pullback from 18K back down to 16.5 or 16K, right? But look, like, as you can see, pretty much on the eve or in the days leading up to CPI, you get some kind of rally. Like, that's just been the theme. I'm not saying that that's gonna be the way it is for the rest of time, but just the theme lately is that we rally into these CPIs. Now this one, not so much. So this one was anticipated to be worse, right? So the market kind of priced in inflation going up, but if you compare it with 8.3% inflation, 8.2 is, well, it's roughly the same, but it is a sign that it came down. So what happened after it? We got this massive rally, this awesome rally that went up, obviously got reclaimed some, that's probably like, looks like a 50% retracement on the FEB level. But yeah, I mean, check out the rally up into this CPI. Really nice rally. That's like a mammoth rally. Here's another example. We're on the 1 hour chart here. You know, anticipating the CPI. Bang, we get it. Where's another example? So you can see more often than not, we do rally into these CPI data releases. Now, when the release comes out, you have to be careful because it gets volatile. Like, look at the drop there. Massive drop. Even though the resulting effect was, you know, moving up, that was the peak. That was actually a bad result. 9.1% CPI. You can see why it dumped, right? It dumped on the data release, showing that inflation went up again. Oh, this was a shocker, this one. You know, this was partly because of the Celsius collapse as well, giving us our June low. Funds rate, 75 basis point hike. First 75 basis point hike in a long time. So, you know, another sharp hike, which actually surprisingly resulted in a rally after it anyway. Like, the sentiment, I'm not sure why, but you know, 75 basis point increase to the interest rate, peak inflation, yet we still rallied in September, in July and August, to come up above 25k even, right? Crazy. And then obviously subsequently we undid all of that effort. We reclaimed all of that move up. We pulled in a higher low still. So remember, our June low was down here. We pulled in higher lows. We never came back down, before the FTX collapse. We never came back down and got lower than that. So a lot of people were optimistically thinking, oh, that might be the bottom. Like, maybe we start seeing a change in the trends here, and maybe we start to build higher highs. Now, this was the line in the sand, clearly, at the time, and it still kind of is, right? That is the line in the sand, 25.2. We have not come up there yet. We're close, but we haven't quite met that zone. So I would be very careful. If we get near that zone, just be mindful. It could be just a little push above it before, okay, we've double topped, and now let's correct the whole thing. Let's maybe not the whole thing, but let's do an ABC off that and trap. It's not about trapping the small guy. It's not about trapping retail like per se. It's just a move that grabs liquidity, right? Because a lot of people may have stops or liquidations above that high there that have been factored in to their trades or to their investment strategy. So all right, let's go up into when the next CPI is. Now I've marked it out here. This is obviously in Brisbane time zone, my time zone here, but it's happening it happens at the same time every CPI release. It's 1 hour before the market opens. So it actually happens for me at 11:30 p.m. So right around my bedtime. But like always, like previous times, I will be streaming the CPI data release. I think it's going to be an improvement of 6.5%. That's my hunch. But let's not assume. Let's wait for the data to come out. You can already see, perhaps we've got a bit of evidence here that the market's starting to heat up a little bit, as we build into the next CPI. Before, if we get a shock, if we get a market shock, like something we're not expecting, maybe that's going to be where we start to correct this entire move, or not the entire move, but we come back and try to find support, like some kind of ABC correction, right? So keep that in mind. And always trade carefully around these calendar events, because they're unpredictable, as we know. We saw that in the last 6 hours. We saw, Jerome Powell come out optimistic, right? But then huge dump, like massive whipsaw, and then complete recovery. Back to almost the same level again, and climbing, right? We've got less than half an hour before the daily candle close. Let's check the larger or higher time frames on Bitcoin right now, because we want to know where we stand. I'm going to hide the drawings for a minute, and we're just going to look at the raw candles. Let's go to the daily time frame, and maybe I'll bring in my moving average indicator set. So the daily 50 and 200s, EMAs and SMAs. And we've got a MACD down there just for good measure. Now, just be aware that this pullback has produced a series of red days. We've had red day after red day, but look, today's candle, which has 25 minutes left, has shown a potential pivot there in direction. So I'm not going to draw on the chart because it'll bring back my drawings, but you can see here, there's been a shift in the color. That doesn't mean that we're going to, ramp up to new highs for the year, but it just means, hey, look, pay attention, because on the daily chart, obviously there's evidence that not only is there a histogram bar change, but we're also bullishly engulfing on the daily of the previous day. Yesterday's sell-off was nothing to fear, really. When you look at it in a whole, like the previous 5 days have been like pretty bad. The bears shorting the top here, our current top, have been paid, right? They've come down and they're like, okay, cool. I've done that move. I'm not gonna expect a move below these lows here. So you can draw a sort of line. All right, let me bring back the drawings, because I want to, but we'll hide everything like this. We'll do it manually. We don't need to look at the events right now. We'll hide those. Okay, and then we'll hide the TA. All right, so just some temporary lines that I'll put up. You can see the daily opens and closes pretty much exist above this line, right? No daily open or close has sort of gone below this point. So that is a very clear line in the sand. Now I'll give you a dollar value for those just listening. $22,600. Yes, there's been some some pushes below, but no commitment, no huge candle closes down, punching below 22.6. So to me, that's some kind of level of support that I've been paying attention to. Once we get a daily close below 22.6, I think that's when that's evidence to sort of suggest that maybe the theme is changing. Maybe we are starting to, get some kind of correction that's been overdue for the people that are tracking divergence, right? Bearish divergence. Just remember, bearish divergence doesn't mean that the price has to crash. That's a bit of a trap for people that look solely at divergence. They think that it's the recipe, the be-all end-all for the direction, and it's not the case. I mean, we had a bull market full of bearish divergence. All of this move up here, all of it, so many instances of bearish divergence. It was crazy. Even the big double top here, which was a big, mothership bearish divergence, happened, right? And it took that to finally see the correction off the backside. So, yeah, I don't think any kind of, anything below, say, the daily with bearish divergence, I don't think that's enough to cause huge macro correction. It just doesn't. I think we've been dealing with that bearish divergence by just chopping sideways, really. I think it's given the oscillators a chance to cool off. Now, while I'm on the topic of divergence, let me bring up the oscillators. So we got here, we've got RSI, huge, obviously bearish divergence, right? Lower highs, while price has made higher highs. MACD even had a high here. See where the histogram pivoted there, that's a high. And then it pivoted down here as well, that's a lower high. But price made a higher high, so that's bearish divergent. Now, have we spent enough time chopping sideways to basically pay our dues for that bearish divergence? I think yes. I think look, RSI has come back down on the daily time frame below the overbought level. It almost made it back to neutral. Not quite. I mean, it's a 59 or a 60. Let's call it a 60. It's pulled back to 60. A 50 would be neutral. Now, if you look on the RSI, check this out. This is interesting. There is a bit of a trend line happening here of support on the daily time frame for RSI. Now I've got that. Let me just put that to the front. So yeah, look at that. It's interesting. I would keep my eye on this, because if RSI breaks that trend, You know, that could be thematic for some kind of pull, like drawdown, right? So keep an eye on that. Check out the RSI. Stochastic RSI has cooled off beautifully on the daily chart. Look how low that baby is right there. You know, what happens on a low daily stochastic RSI? Like what happens after it, and after it crosses back up? Like here's a point here on the chart where it did it. Here's another point where it did it. Let's just find them all through here, like that area there, that zone. Low stochastic RSI on the daily, more low here. So I'm just picking out the points that went low, right? This was huge divergence, by the way. Like, look at this low here compared to that low, up all the way up here. But the price went lower. That was huge bullish divergence there, which kind of spelled the move that came up. So, and look, okay, after every circle, we know that that's low RSI, right? Low daily RSI. Look what happened after each circle. Move up, move up, move up, move up. Huge move up there. It's one candle. See that bounce? That was the FTX crash bounce. Low RSI here. Green candle moved up. Now it chopped through here, granted. But so did, like, the stochastic kind of stalled, didn't it? It came back up above the oversold line, but it stalled out. It was waiting. And then all of a sudden, we got the change of the year. So we come into the new year, 2023, and look, huge move ups reflected by the stochastic moving up as well. Now, check out this. This is interesting. Let me delete all the squiggles here. Okay, so we've moved up, right, on the daily. This is why stochastic can get confusing, because look, stochastic looks so cooked here, right? It's so overbought. You would think, oh, we're due for a collapse here. We're due for some kind of pullback. And yeah, we did. We got some kind of pullback. It wasn't violent, though. It wasn't enough to end the party, so to speak, right? But look, we made a lower high. On the stochastic, right? Look, there's a high here and then a lower high here. And then on the price, we had a high here and then a higher high up here. That is bearish divergence, right? Bearish divergence. How did we pay for that bearish divergence? We got the RSI to cool back off. Awesome. That's what we want to see. We want to see things, you know, reset. But did price crash? No, it didn't. It just chopped sideways. So now you can see why I've been saying, like, you can pay for bearish divergence with time. There's two ways to pay for divergence. There's price. There's two factors here, or time. You can do a time-based correction or a price-based correction. Now, pretty much the way I see this whole area is it is a time-based oscillator correction, right? We've just been cooling, chopping sideways. It's consolidation. You know, it's a repeat of this. Let me delete this. Okay, here's a very smaller version of it. You know, a time-based correction. You know, we just consolidated at a level and then we got the measured move up. Like, you know. So look, I think we're in a similar, like there's a good chance we're in a similar kind of setup here. We're doing a time-based correction. Just because we're getting this huge dump, this huge indication of bearish divergence does not mean that we have to correct by price. We can correct by time. Think of it that way, guys. I think it's a good way to keep your mind open to possibilities. You know, the market, it is still rife out there. The FUD that is getting laid on thick about impending doom. That'll never change. There's always going to be people calling for the end of the world and, you know, a massive recession. But are we getting evidence of that yet? No, there's no hard evidence, guys. There's no data to say oh, like, markets are going to crash tomorrow. You know what I mean? Like, so just play the, like, if you had that mindset the whole way, you would have missed all of this awesome trading. Just trade the market. To quote Piskett, just trade the market. Anyway, yeah, look, he's not wrong. Like, if the trend is your friend, if trend is up, then trade to it. What do we got? 15 minutes left till the daily. Let's go back to those moving averages because I know that's a bit of a meme at the moment that we've got this weekly death cross and daily golden cross. So let's address that, and let's go to a longer time frame as well. Let's go to a chart with more data. So we want to get, let's see. First of all, I don't want all those squiggles left on my chart. Sorry, the OCD in me is telling me to get rid of all that crap. It's from over here. I don't know why it left it there. Lead. I'll get rid of that line as well. Anyway, I'm pretty confident we're holding support here for now. Until proven otherwise, I think Bitcoin will stay above 22.6 until, post CPI. Maybe we get a dump after CPI. Maybe that's how this plays out. Where was I? I was going to grab a long-term time frame chart for Bitcoin. Now, the best for that is either BLX or the Bitcoin index. So BTC USD index provided by TradingView. It's a TradingView chart. Anyway, daily chart. Let's go bring in those EMAs. I kind of got sidetracked, but yeah, EMAs, daily chart. Let's go simple to begin with. Simple moving averages will turn off the EMAs and focus on the SMAs. So SMA is a simple moving average for those that don't know already. And I'm sure most of you do. All right. So is a death cross the end of the world? Like, is that, do we expect death crosses to produce brand new bear markets? Not all the time. Look, we had one here. What happened on the days post the death cross? We actually moved up. We got activity off this low here, down here. Let me zoom into this area so we can really analyze this. Okay. Death cross happened. Bang, bang. This was a bad day. Sure. Granted. However, look, we came down and tested 29K at the time. But then we found support and bounced up after a death cross. So you can see this death cross is actually a lagging effect of what happened, a few weeks prior, right? We already started making lower highs. We sort of, we smelled the smoke before the death cross, before the fire of the death cross, right? We saw what was happening. We saw this change in market structure. So this is, I think, with death crosses and golden crosses, they can kind of be a late, and they won't serve you too well in predicting the future or in trying to forecast the future. Because look, this can happen. We had a death cross, which only lasted, it only pushed us down to a level we were sort of in the neighborhood of anyway. It didn't create a crash. The crash already happened back here. So death cross happened. We're sitting here, death cross. Okay, cool. Chop, chop, chop. Maybe a tiny little pullback back to a low we already saw, at the death cross. But then we start rallying again. And we push that moving average back up above. And we get a golden cross over here. So as you can see, I don't think the death crosses and golden crosses are too much to go off solely. It's a piece of the puzzle, but it's not the entire puzzle, right? So let's have a look. Let's go across here. Golden cross. We actually dipped after the golden cross. Look at that. We dipped. Found support though, and then continued to rally up to a really strange $69,000 all-time high, which was hugely divergent, as we know. But yeah, look, check it out. Look how noisy it was back here in 2019. We had death cross, pumping into a death cross, for God's sake. Here's a golden cross, dumping after a golden. Look at that. Look at that huge dump out after a golden. The death cross came late. Look at that. It's like, yeah, we already saw the dump. Thank you, moving averages, for your input there of like warning us of what was going to happen. You actually set us up to be bullish with the golden cross, and then price snapped back the other way. So this is why this whole death cross, golden cross can be a bit of a trap. So be careful with your expectations based off that. It's all it is. It's reporting. It's basically like mainstream media. They report after the fact. Like, it's not live. It's not in the here and now. It's lagging. And you know, that's all this is. It's a lagging indication of what already happened. So COVID crash, death cross happened after we already started bouncing and recovering from it, right? Golden cross. Oh, we've recovered. Yeah, no doubt. Like, yeah, we know that price. I mean, we know that moving averages. So here we come. We're climbing back up. Whoa, T Black with the $20 super chats, super stickers. Appreciate that, man. Thank you. So yeah, like, look, golden cross, death cross. This just happened to be, you know, a golden cross that caught the start of a really nice rally. So yeah, sometimes they do work out in picking the theme, but in this part, like, look, it's a choppy market that we came through here. So yeah, obviously price and moving averages are gonna cross paths a lot when you're ranging. That's a ranging market. This is why ranging markets are very ugly to trade in on, you know, higher time frames. So you wait for the very clean confirmation or break, you know, that that there's a trend that's been established. You wait for evidence, like, you know, higher supports, higher highs, you know, higher highs, higher supports, higher highs, higher supports. You know, at that stage, obviously the trend is on its way to new all-time highs, obviously, right? So yeah, you just wait for that evidence. Now, we haven't quite got the evidence that this is going to be some really nice big bull run, even to 30k. It looks good, but we haven't got the total picture just yet. You know, we've only just freshly golden crossed on the daily, and I will cover the weekly death cross in a second. But let's look at the daily golden cross to begin with. As we know, this golden cross, as I said earlier, these death crosses and golden crosses are a lagging effect of what happened previously. Now, what happened previously to cause this golden cross? Obviously this huge rally we've been riding all of January, you know? It's like, yep, thanks EMAs, thanks for warning us of that coming. You're late to the party, you're like a month late. So just look for this for confirmation, guys. Don't look at it for direction, or like as in, forecast. Just, it's confirmation of analysis that you've sort of been building prior to the move, based off market structure, you know, and other indications, right? So anyway, now let's look at that looming death cross on the weekly chart. I don't think it's quite happened yet. They might be touching. Oh, yeah, it's looking scary. It definitely looks scary. Do you know what this is though? What is that weekly death cross reporting? Like, what the hell is that? It's reporting the bear market that we've just spent, you know, 12 months bleeding out, and then this lagging indicator, the death cross on the weekly, is finally saying, hey guys, we had a pullback, we had a bear market. It's like, yeah, thanks, we know, we've just come out of it. You know, we're on our way, we've bounced already to some extent, and we're coming back out of it. So look, yeah, it's people are scared because it's never happened on Bitcoin before. Look, we've got the entire history of Bitcoin here on a chart. Logarithmically speaking, we've never, linear and logarithmically, we've never death crossed on the daily, on the weekly time frame, right? It's never happened. This is the closest we came back in 2015, but it was a near miss. Like, oof, we got out by the skin of our teeth on that one. Now, could this happen? Now, I spoke about this in the previous stream. Obviously, you can see the trajectory of the 200 weekly simple moving average. It's very clear to see that it's probably going to continue doing something like that, right? That's its trajectory, right? But the red one, let me change this to red. A number of things could happen here. You can see, okay, it started getting like fairly steep here, right? That's kind of steep. But can you see ever so slightly that momentum has slowed a touch and it's starting to curve, like just ever so slightly. So if price, remember, price dictates what the moving averages do, not the other way around. So if price holds this level and even starts to climb and test 25K, maybe that's where we see this lagging moving average line start to flatten out a bit, you know? And like, let's say price stays optimistic for the rest of this year. Maybe that's when you get this one start to really start curling up, and then we get a weekly golden cross. Wouldn't that be cool? Just food for thought, guys. Like, price, look, it's done it before, hasn't it? Quite obviously, price moves these moving averages. That's what they are. It's an average of what price did in the past. It's not an average of what the future of what price is doing in the future. It's an average of the past. That's why it's lagging. But we use it to see, you know, trajectory and direction. That's simply it. So yeah, like, look, it's never happened before, but we're about to find out what happens on a weekly death cross on Bitcoin. You know, we can put it to bed after the fact, but yeah, that's it. That's my sort of feelings on it. I'm not terrified of a weekly death cross. Like, so be it. It's reporting on old news to me. That's how I see it. Just as the daily golden cross is reporting on old news. You know, it's reporting on things that happened, you know, in the new year, like in January. It's like, yeah, cool. We saw that. Thanks a lot, Golden Cross. Thanks for reporting the obvious. But anyway, like, look, let's see if we can ride this 50 daily moving average. Like that's what I mean. Like, the important thing is to see where, like, if we can sustain this level. This is why market structure is going to give you a lot more evidence. So we know there's a key level here off this pivot, right? That's market structure. We broke that structure. That's a change of character. A change of character. Wait, I didn't do that right. It's change of character. I think that's how it's sort of drawn out in a lot of the indicators for smart money concepts. Anyway, change of character. Now, what do we need after a change of character? Change of character is great, but it needs to be followed up by a break of structure. So what's a break of structure? Well, we know that structure exists right here. This is our high that we're dealing with, right, at the moment. Now, a break of structure would be if price came up and punched through that, then we would get our BOS, our break of structure. Not the Bank of Scotland, but the break of structure. So that's where we're at, guys. We're just waiting on the confirmation of that break of structure. Now, what would break us back down bearish is a change of character back to the downside. So how do you change character back again? So changing character to the upside is breaking the previous high. So how would we break? How would we change character? We would have to come all the way down here. You know, you can see a small one here. There's some support here that if we broke below that, that would change the character as well. So there would be another change of character here, a bearish one. If we lost the price level of 20,400-ish, 20,375 to be exact, right? That would be a bearish change of character, but we're nowhere near that. We're still, you know, until we see that evidence of us losing that low, we're bullish, right? We're in a bull trend. It's early, like a lot of people are uncomfortable calling it a bull market. I know that I've said that I think it's a bull market because we're above the daily 200 SMA, but we've just had the daily close, guys. We're 1 minute into the new day. And look at that beautiful bullish engulfing candle on the daily chart for Bitcoin. So is that kind of a hint? You know, leading up to CPI, we know CPI is coming up on Valentine's Day, right? The 14th. Is that enough of a recipe to see 25K? I think yes. I think that's, you know, it's not crazy. It's not an outlandish projection to say that, yeah, I think we might see a retest of these highs. Now, it's not guaranteed. Remember, nothing is guaranteed in markets. You can be very unpleasantly surprised. But look, all you're dealing with is probability. Like, you're trying to formulate some kind of rationale as to why price might, or projection as to why price might go where it's going to go. And that's how you trade, right? You build a case and you take a position in favor of that case or that projection. And either you stop out because you were wrong, or you ride into profit because you were correct. So my case at the moment would be some kind of bullish case to at least see, you know, prices testing back up above these highs, maybe above 24K to begin with. You know, let's take it one step at a time, right? But by no means do I think we're going straight to 30,000 or anything like that. I'm just thinking, you know, there's a little bit more fuel left. There's a little bit more gas left in the tank for us to see that little wiggle up, especially off the back of Jerome Powell's comments and, you know, leading up into CPI. All right, I know I'm repeating myself a lot here, but anyway, that's pretty much all I wanted to cover today, guys. So things are looking optimistic until proven otherwise. And obviously, if we get proven wrong, or if I get proven wrong, then so be it. You know, my outlook will change. And that's what you, as a trader, as an investor, as an analyst, you adapt to new information, right? So when that if that new information comes out that we're, you know, breaking below 22.6, then, you know, I'll hold my projection, you know. When that new data comes out to break my projection, then I can change my outlook. And it's not it's not a bad thing for an analyst or anyone to change their mind on something when they're given new information. So that's what we're constantly doing that, right? And this is why we use stop losses, and this is why we don't make, you know, Nostradamus predictions, because we can be wrong, and more often than not we are wrong, right? A lot of people are wrong. Even the experts get it wrong. So get comfortable getting wrong, guys, or being wrong, because it happens a lot. But it's your risk management and you staying humble to the market and letting the market dictate the price and not you, that will make you profits. You know, that's what's going to keep you alive in this game of either trading or investing, right? Like, let the markets provide the evidence and then act off the evidence. Whether that's technical or fundamental evidence, then, you know, so be it. But yeah, it's not about trying to predict the future. It's like, there's this fine line between prediction and projection, I feel. I don't know. Anyway, I'm pretty much running out of steam here, guys. Like, ooh, super chat. Thanks, Manny. Appreciate that. Bravo. Cute little Doge sticker there. Yeah, anyway, guys, thanks again for tuning in. A bit of a lighter audience today. How many did we have? Peak 20. That's cool. 20 of the most loyal. All right, guys. Appreciate you guys. Thanks for the support and all the best in your trades. And I'll no doubt be covering the market between now and leading up into CPI, and on CPI on the data release. I will be streaming that, so I can't wait. It's always exciting. And yeah, take care, and I'll catch you on the next one.